Right now we're sitting just above the golden dump line right here. We had a sell signal. We had a short signal. 88.24. We're now under the EMA ribbon. We're sitting right above the golden dump line. So this here is key. If this doesn't hold, we're going to flush all the way back through this cloud. You look over here, the energy is leaving. Starting to bleed out. But what's key is this golden dump line. Is it going to hold or be support? So far it's 10 minutes of sitting on that golden dump line. So it's holding, but we're also staying under the EMA ribbon. This to me is a no trade area. You're either already in your trade and you're just seeing if it's gonna resolve, so you're in that short and you're seeing if it's going, or you're in your long and you're seeing if it's going. Other than that, I wouldn't enter. Bill Al's got a question about the momentum squeeze. It's the bottom oscillator here. It's based on the TMI squeeze from John Carter that's available with TD Trade, Ameritrade. I think it's called the Trader now. So basically what you're doing is you're seeing the energy through the trade. So let me just scroll back a little bit. So right here, you knew that there was a lot of energy coming in, and it peaked. And then the energy came out of the trade. And then this is the backside, so you know the energy is depleting from the trade. And then we go to the front side of the downside, where the energy is also increasing, and then it depletes. So these peaks and these valleys are where the energy is moving. And then this is what you're looking for. Is you see this energy here is building as it's dropping. You know you're going to have a prolonged short. So this would be a good trade area to take. This also would be a good trade area to take because you got two little mountains. So you have the energy coming into this again. And then this is what you're normally getting, is just these trades right here, which are ebbs and flows. And then this here is also another area here that tells you you got a prolonged squeeze coming. And what the squeeze is doing is helping you give you direction. So you know that even though it's only small, but it's prolonged, you know that you're going to have opportunities in here, as it shows, to grab some shorts. And then here you have the green. So the energy's come out, and then the energy's built into this. And then you know on the backside, it's going to lead to a negative again. So once you peak, you can grab a short as the energy leaves, hence a short as the energy leaves. And then as the energy is returning, you can grab a long, and then you just ride it. So that's how the squeeze happens on that. And what's that's used for is that's used for the confirmation of what the indicator is telling you. So before, this is all you were getting. And then you would have sometimes false breakouts. So like right here it'd be a false breakout. It's telling you the short. There's a trend reversal telling you the short and trend reversal. And you've got this going up. Well, yeah, you could have scalped the trade on the 5 minute by adding the squeeze. You know that it's going to be a smaller trade, so you know it can only be a scalp. This time frame right now is a 5 minute time frame. So that's what this lets you know. It just helps to negate this here, because you can wait for the indicator to tell you it's gone in already in a direction, but the trade's already gone in the direction. So this is calculating and completing the candle based on what the previous candles have been giving you. So it gives you a bit of an edge in real time to decide if you're going to enter the trade or not enter the trade. But what you're really looking for is you're looking for this right here, this confirmation. You want this trade exit, trend reversal, and then you want this new buy, because this means that trades are done. Whatever trade happened before this candle are done. So looking for a new trade, this is the new trade. So the new trade is the blue buy. So you're getting the buy, and it's a good setup too because it was underneath the EMA ribbon. So if you bought that candle, you're going up, and then this buy right here is a breakout buy. It doesn't mean that this candle breaks out. It means the candle after this that breaks out over this top is the breakout buy. So it's a breakout or fail out. So either there's going to be a lot of volume that comes in, you got a spike, you got the volume, but it didn't continue. And that's what usually happens with a breakout or bailout. Is either gonna break out and then run, or it's gonna fizzle. And 90% of the time, sadly, it fizzles. So you know that if you've got your blue buy here, you know that next time this comes over this top, you need to be selling into it. Take that trade, lock in that profit, at least some, if not all. I always say reduce it to half, and then you've locked it in, and if you stop break even, you'll never have a losing trade. And this is the golden dump line right now. We're sitting above it, and we've now back above the EMAs, but we're not putting it in volume. Like, it's so low in trades. Bilal, you can exit trade any single time you want. You don't have to wait for the indicator to tell you to exit trade. When it tells you to exit trade, like right here, on the purple says the trade's all done, it's basically the last minute. You could have exited this trade for more profit anywhere else. So if you would have bought this one, you could have exited here for more profit, here for more profit. Exiting here is actually going to give you a losing trade, but it's getting you to exit just before the dump line is crossed. The same as this one here. If you bought this one here and you wrote it up, you're exiting over here. You're still in profit, but you're not at maximum profit. So you need to yourself make the decision to exit trade to stay maximum profit. That's where your trading and support and resistance comes in. This is only going to give you an idea for an entry. The exits are really on you. So an entry beneath the EMA is a good entry. And you've got to the golden pump line. It didn't break. Came back down. Stayed within the EMA ribbon. You could re-enter this trade, because you would still be re-entering just below where you would enter the first time, and then go through. You just have to remember that you're not ever going to allow a candle to close inside the EMA ribbon once it breaks out. So once you bought this, it's gone. You're not going to allow a candle to close inside the EMA ribbon for a loss. So once this started coming down into the EMA ribbon, you close the trade. You can re-enter it back here if you want, and you can now use that profit you made in that small scalp as your risk for re-entry. But as long as you're entering the trade before you've got this close out, you're still in the same trade. Once it closes out, you're going to have either a short that's going to happen, or, as I said, that's why you're watching this here, because you're going to have that trade reversal, which was pictured here. The short came here, and if you're looking at the short, you're like, okay, well, is this energy going to keep dissipating? Well, it doesn't. And then this one here, you just negate this. This means absolutely nothing. This means absolutely nothing, because within the context, it's not going green to green. It's staying green to red. So this green means nothing. This red means nothing because it's staying red. This green is important because it's at the back end of the energy dispersion. So there's a potential for the trend reversal here. Yeah, exactly. You want to take that $20 to $30 scalps, especially if you're using leverage. But when you see this here, this is what you're looking for. You see the height of this of the range. You want it over -20. If it's over -20, you're going to get some action. So when this gave you a short here, and you saw this start going over -20, you're like, okay, we're going to get some action. It's going to do some moves. The same as when you saw this buy here, and this is going over +20, you're like, okay, we're going to get some moves. Anything under 20 to 20 is just side-to-side chop. So this here, I wouldn't trade. That's why I call no trade zone. I wouldn't trade this. Other than the fact you're looking for a scalp, and when I'm talking scalp, you're looking at maybe 10, 15. Sometimes it's not even worth it. But you want to get these big moves because they're going to present over 20. Then you know you've got to move, and that's how you use the squeeze indicator. Squeeze indicator helps confirm and negate the false breakouts you're going to get from the fact that this is going to post early. And then this here is manipulation. You just know that there's manipulation going on in here. If you're going to trade it, it's a risk because you don't know where they're going to push it. Majority of the time, it's been a short, but we're now down from that 40% pump. So it makes sense when we're pumping that manipulation is going to bring the price back down. Just remember, you really want these values to go over 20. Like this here, small, is basically like nothing happened. It just means that the energy came out and it's just flat. And then you got a little spike here for some buys. You got a long alert here. And then you got a bit of a ride. It gave you about $60 of range on this one. 60, almost $70 of range on that. And that's why you want to be catching these, because these will give you a range that you know that the $30 scalp's going to be work in it. Yeah, if you have the TTI, the Trade 10 indicator, you should have access to the squeeze too. I gave everyone who purchased TTI the squeeze because you run them together. And then you also want to have up your 15-minute chart too. 15-minute chart is going to give you the overall context of the trade time frame, whether you're trading on the 3 or the 5. If you're on the 3, well, 5 of those candles equals a 15. And if you're on a 5, then 3 of those candles equal to 15. So that's going to be your common denominator. So as you see right here, we're starting to come out of the squeeze. So we had this go light. And then we had a possible trend reversal. We have a buy signal right now. So I'm going to go ahead and put a buy in. Let's see if I get filled though. So I got a buy in here. It's now gone to light, so we're on the back side now. We've got a trend reversal. We're above the cloud. We're above the EMAs. We're above the dump line. So it's a setup for a possible scalp. So I just put a small little entry in there. We still got 3 minutes 22 seconds in this candle. Now there's a possibility that this could pull back to the cloud, but we're watching this here, so we know we're a little bit early because this hasn't dissipated completely. But as I said, under 20 it's basically flat. He's wondering where he can purchase that at. Basically, just go onto my own personal website, contact me through the email there, and then I'll respond back to you through that email. That way you know you're not getting phished, scammed, because you're actually going to initiate the contact first through that email. I will never contact you first, so you contact me, and then I'll respond to you back. And then I'll send you the purchase link for that. So we got a little bit of a movement. Now we might luck out and catch this live because we've had some basically flat movement. We might be able to catch some actual energy coming to this trade now that we're above the cloud. So we'll see. But remember, the overall context of this is we're looking at the 5-minute window. So this is in terms of a trade, a scalp. This is not a swing. If you're looking to swing this, you'd be looking at this on the 15, the 30, and the 4-hour. To me, trading is a lot like fishing. So normally when I do this, I have some tunes up or I'll be watching some Netflix. Once I'm in the trade, I kind of just go do some things, pop back, and just kind of watch it. There really isn't any way to optimize the indicator anymore. It's as optimized as it will get. It's just understanding it better. As we're explaining, you're using the combination of the squeeze with the indicator. As you can see, these are under 20, negative 20 plus 20. It's basically flat. What you're looking for is you want to be entering with the expectation that it's going to go above 20 for the energy. Whether it's green or red, it's just energy is coming in to one side or the other. So energy in this one, it's green, is coming into the upside. And then once you cross over on the backside, energy is coming back out. This is the pullback. This could be a short area. As it's going down here, it's going into a squeeze, so you're going to get the squeeze dump. And then this is prolonged. As you see, there's two little peaks, so it's prolonged. So you know you're going to have a longer trade here for short, which also means that when it reverses, you have the opportunity for a possible good spike, and you did, as it was coverage, a lot of energy. So if you caught that dip, you got some energy. And then came back in and we're flat again. So right now we're coming out. We're on the backside right now of a very small, not even Not even a 5, really. It's like 6.8. So the expectation now is, because of the setup, above the EMAs, above the dump line, trend reversals come in, energy is coming out, and we just got the blue buy. The expectation is that this is going to give us a nice little move. Like I said, some guys go for the 1% rule depending on how much they're leveraging on the account. Others use the 3% rule. I personally don't trade off P&L, profit or loss. I trade off what the chart is giving me and what the targets are. And because of the setup that we're at right now, there really is nothing here for a resistance. So this is, to me, is a really good opportunity that we might get a lot of energy and we might get a really good, nice trade. It was nice. Close another candle, a little bit brighter red. So we're just here. And that's the thing too about TTI. TTI doesn't give you lagging indications. It's going to alert you early. If anything, it's going to give you some false positives because it doesn't wait for the candle to confirm before it tells you that there's a possibility for a trade. And what the TTI is doing is giving you possibilities for entries of trades. Exiting your trade is on you, except where TTI says any trade from that candle should be closed. So that's when you get these purples. So these purples mean that any trade from this point here should have been closed. You're looking for a new trade. This is where you're entering in. So you could be away from TTI at work or whatever, and then you come in, set it up, let it run for about an hour or so, and you're looking for an entry. Well, your entries would come after these. These would be the new trades. So this here is a trade. This here is a manipulation, and it would close all your trades again because it's manipulation. And then there was a possibility to short this one here, and you would shorted it to the dump line. That's again the awareness you would have had to have had. As I tell everyone, short to the dump line. It would give you your EMA flush. Cover half there, and then you'll never have a losing trade. So even though it went back up, you're break even on that. And you've still got a little bit of the profit. And then you've got this here, buy right here. And then we're just waiting on this to resolve itself right now. As we're still on the backside, problem is we're just having no volume. No volume. So that's why everything is in the mindset of scalp trade only. So I'm just going to grab some juice, get something to drink, guys. So we got that green breakout buy here, guys. So as I told you, breaks out or it fails. We might get a breakout just because it's at the flat where we're turning from the negative to the positive. So 25 seconds left. Next candle over 88.36 is the potential for the breakout. So we find out in about 15 seconds. So we got ourselves our green breakout. So this setup is key right now. So we're above the EMAs. So let's backtrack it first. First, we got the manipulation, so all trades should be done. There was the short to the golden dump line, didn't dump. There was the reversal, indicated here, also with the blue buy. So blue buy was first, then the reversal was indicated over it, and we stayed above the EMA ribbon. Riding it, then we got the green buy, which is a breakout or bailout. And how this sets up is the next candle is the breakout. You just need volume to confirm. And this setup is key because you have the squeeze flipping. So it's flipping from a negative pressure to neutral. There's no energy in it. To energy starting to come in. Now its volume is needed. So as everything in trading is, without volume, you have no action. So right now we're waiting to see if volume comes in. Trades like this are more prominent during the day. You have more traders watching. More traders in, you get more action. But at nighttime, it lets us stream better so we can do better teaching. So. "38 seconds left in this candle. It's a 5-minute candle. So normally when I trade, like I said, I just have tunes on or Netflix. Just something, to me this is like fishing. You've got your bait out there, you've got your reel, you're just waiting for something to bite. So we still haven't closed on the EMA yet. Got 13 seconds left. So the trade is still on. Well, that's it for me. I'm going to exit that trade with at least 1.5% profit. We were up as high as 4, but it just didn't break. And I'm not going to allow a candle to close within the EMA. As you can see, we're just about to do that in 1:35. So I took the 1.5% profit on that scalp. And there we go. We're inside the EMA. So that's what I mean about the exit. You're not going to sit there and wait for it to complete if you know the risk. And also looking at the 1 minute time frame, because some people trade scalps on the 1 minute. It's now touching the cloud. So that would have been a short entry on the crossover on the 1 minute to the cloud, which would have been the same time we should have exited, about 83.36. But because the setup on the 5 minute was still in our range, we stayed in it. So at the end of the day, we still closed with profit. We just didn't close with as max profit. But that's what I mean about this breakout or bailout. You have to be mindful of this, that this next candle doesn't, then you're gonna be in some issues on needing to exit, and there's your exit on the trade. So this is what I mean about it printing in real time, telling you to exit the trade now. You should already been out. Every trade on the left hand side of this candle is now done, closed, needs the exit, and we start afresh and new, waiting for a new entry. And that, guys, is basically how TTI works. And you combine it with the squeeze, and I hope it keeps you guys profitable while it also teaches you some of the stuff that you need to learn and helps make that decision of whether do I hold or add to a pullback or not. So I put about 24 years of teaching knowledge into this, and countless hours in the coding to make this easier for the layman trader, the new trader, the novice trader to understand what in my mindset I can see when I look at a chart. So I hope this helps you guys, and I hope that the pricing I chose on it is, you guys would agree, is favorable. I tied it to the amount of hours I put into it. That would be the same as if I was at the job I have. So I'm not trying to gouge anyone at the same time too. I'm hoping that you guys will learn, and this will be a good teaching tool. And as you see, there's a trade reversal coming up. So I'm off for the night, guys. If I see some opportunities, I might jump on later. But it's my Friday. And as always, guys, trade socially.